The clock is striking 9:30 here in New York City, though, and that means it is time for stocks to begin trading. Our opening bell coverage is sponsored by Flex Shares, and you see Snap-on Tools.
They make amazing tools.
Ringing the opening bell.
They really do. I mean,
yeah?
the auto mechanics, huge. Just a really good company.
Well, they seem very excited about it this morning.
That's Nick Pinchik ringing that opening bell, longtime CEO of Snap-on.
Well, they are very cheerful at a time when there's not a lot of cheer out there, is there?
Good for them, though.
If you look at the opening prices here this morning, we are indeed seeing declines, and that's after we got CPI coming in hot. 8.6% on the headline here, 6% if you look at the core number excluding food and energy. And even though we saw a decline in stocks yesterday in anticipation of this number, they're continuing to go down on concerns here that not only about hot inflation, which affects everyone who buys anything, but that the Fed is going to continue to be aggressive and raise because of this high inflation at the same time that the inflation is pinching economic growth.
Yeah, two categories people really look at. Food, gas, right? Food, that increased 1.2% in May, already had seen a nearly 1% increase the prior month, 0.9% there. And then at the home, it rose 1.4% in May. So people buying further into just making sure that they can try and make cost-conscious decisions, they're still seeing those prices rise right now.
And another thing they're looking into is their portfolios on the Yahoo Finance platform. This is, I would think, one of the worst readings you can get on inflation because you have an accelerating print across increases across the board. Now you have to worry about what does come at that Fed meeting next week, not only in terms of how much they raise rates, but what does the commentary look like? What does that FOMC statement look like? What does the Powell presser look like? These are all, you could be seeing right now a spook market into the weekend.
Well, yeah, that's kind of what I was talking about with Lori, right? Is
Yes.
that we're all human. People who manage money are human as well. So not only are they seeing stocks go down, but they are paying these higher prices as well. And so there's definitely poor sentiment, I think it's safe to say.
Where's the positive? We're always looking for the other side of the case here. Well, where's the positive? You did not see it in that CPI. Acceleration ahead of consensus estimates, not good things. And increased across the board. I mean, airline fares up 13%.
Well, at some point, I guess the positive would be that at some point, higher prices is secure for higher prices. Who was it? There was an economist who said that to us this week. I think it was Nathan Sheets yesterday, maybe. At some point, people are going to look at these prices and they're going to say, I'm not going to buy that thing that I was going to buy, or I'm going to buy the cheaper version of that thing. And companies will have to then moderate their price increases. It's not happening on a widespread basis yet.
Well, yeah, there's still a value payoff that consumers are going to look for. And it can start as small as if you're buying something that you want to eat, a snack, and you realize it's way smaller. Or it can get as large as a home to say, you know what, I've got to back off of this purchase decision.
Well, that seems to be happening.
Exactly.
That is something that does seem to be happening, which we're going to talk about more in just a